Thank you.
Thank you. With that, let's move on to the next discussion that we have for you. Aether Industries is the next corporate we're speaking to. Recent news flow suggests that there has been buying activity among dealers that's gotten muted on account of a conscious attempt to keep inventory levels low. We do have with us Aman Desai, who's the founder and director at the company, joining in. Aman, thank you for joining in. Do you think buying activity has been reduced, and are there any supply disruptions that still exist in the global market, or it's just individual chemicals and you're not facing the same?
Mangalam, good morning. Thank you for having me again. Always a pleasure to be here. In terms of supply disruptions, we don't see that happening anymore. We have seen that the global supply chain, as well as demand and supply and customers have kind of come back, are coming back gradually to the norm that was there about 2 quarters ago. And so I think things are looking good, and we are positive. In terms of buying, I don't really understand your question, if you could repeat that.
No, so we have a note which has come in from one of the brokers. They say that buying activity amongst dealers in the chemicals industry has been muted due to conscious attempt to keep inventory levels low. There are demand pangs in key markets like textiles, paints, coatings, as well as construction chemicals. So just wanted your thoughts on this.
Yeah, I understand now. So in terms of buying from dealers, we don't really deal with dealers as much. We are dealing directly with customers, which are multinational customers, domestic and globally, across the industry spectrum. So, for example, pharmaceuticals, agrochemicals, material sciences, and oil and gas. And so there's no question of us working with dealers. In terms of the global demand, in the last 2 quarters, we saw a pharmaceutical softening in the global market, which has kind of gone back to, it's starting to go up to its normal demand as well right now. And that was because the pharmaceutical customers were trying to reduce their inventories, which they had stockpiled in the time of the COVID pandemic.
Okay, so
as such, we don't see any such issues.
But can you give us a little more details? Because, 65% of your business comes from exports. You said that pharmaceutical demand was a bit under pressure. Most companies have indicated that export markets have been lackluster. So any impact that this would have on your business, what would the export revenues be? Are you expecting to see a fall this year?
Yeah, Sonia, no, we have not seen any tapering off in the export demand. In the kind of contracts and the arrangements that we have in place with our customers are usually multi-year, especially in the contract manufacturing side of the business that we have. And these are multi-year supply agreements that are in place. And there has been absolutely no softening in especially the CRAMS business model and the contract manufacturing business model. Rather, it has been the contrary, where we have seen demand grow up and go higher. In terms of the large-scale manufacturing business model that we have, which is largely driven by pharmaceuticals, globally in the export area, there has been no softening. In the domestic region, in the last 2 quarters, there has been some softening. But again, as I mentioned earlier, this has picked up again. And so export, in terms of our export outlook, in terms of export business, we foresee that to be growing in the quarters to come, as well as in the current quarter.
Okay. So can you tell us a little bit about, first, if you can tell us a little bit about the numbers itself. I mean, what are you looking at if you're expecting a growth in the second half of the year? I think your revenues grew just about 6% in the first half, and you're sitting on a base of about 300 odd crores. In the second half, what could the growth look like?
So especially in the last quarter, the Site 3 manufacturing, the new greenfield manufacturing site that we have, is coming online as we speak now. We are going to, over the next 2 weeks, we are slowly starting up production in the new greenfield production site. And so that will have a significant contribution to revenues in the last quarter of this current fiscal year. We are launching 5 new products for the first time in India. There is significant demand for these products already existing. There's a significant order book already existing for these new products that we are going to launch. And so we anticipate the new greenfield manufacturing site coming up right now to add significantly to the top line, as well as maintain the bottom line and try and increase the bottom line.
But you're not giving us any numbers. We're still looking for some kind of growth targets.
So we will achieve growth over the last year. We will try, and since it is only the last quarter that's going to benefit from the new greenfield manufacturing site coming up, we are cautious and cautiously optimistic in venturing out growth numbers. But we will achieve growth, whether that is in the higher single digit or double digit growth, we will see. But we are definitely anticipating growth year on year.
All right. And finally, before we let you go, you added 11 customers in the second quarter. In the third quarter, has that number been higher than the previous one? And at peak, what will R&D as a percentage of sales look like?
Yeah, in terms of customers, we have consistently added customers all the time. What we are always more excited about is the CRAM space and the contract manufacturing space, where I think we are firmly established ourselves as partners with various multinational customers across the industry spectrum. And we have added, I think, close to 7 to 8 customers in this current quarter. In the large-scale manufacturing business model also, I think the same amount of customers have been added. And so I think the number of customers added have increased, I think, slightly. I'll have to check. But in terms of, and I forget the last question, Mangalam?
That was R&D as a percentage of your revenues.
Yeah, so we have purchased adjacent plots of land to our R&D center, and in this last year, we have tripled our R&D infrastructure to become a world-class R&D center. Currently, the R&D expenses stand to about 7 to 8% of the overall revenues, and we do anticipate that the R&D spend, which is the heart and the engine and the driver of our company, will remain at such high levels at 6 to 7 to 8%.
All right, we'll leave it at that. Thanks a lot for joining in and have a great year ahead. By the way, just keep an eye out on the market. It's 100 points lower now on the Nifty, so we've moved to the low point of trade. The Sensex is down almost 400 points, so turning out to be quite a disappointing morning for the bulls, that is. The Bank Nifty is now down over 3%, so this is the lowest point that we're looking at, and we have such a long day to go. But when we come back, one of the sectors of the year undoubtedly has been PSU banks. Dinesh Kumar Khara, the chairman at State Bank of India, will be with us to discuss what 2023 looks like for the banking sector. Do stay tuned in for that conversation. And later, we will also connect with Ram Praveen Swaminathan of Mahindra Logistics to discuss how the logistics sector is expected to perform in 2023 and how's the business momentum there. Stay tuned. Welcome back. Well, 2022 has been a